doing 270 together with 350. All right. I suppose by now you've already covered your PPE, topic PPE. Okay. But that doesn't mean you cannot follow, yeah. Jadi I will not, I will not go through everything in details. Okay, cuma saya akan pergi terus kepada ni. Okay, I'll go straight to this one first. Okay. Now, if you look at your GC, okay, I've provided materials. Okay, materials on PPE and so on. All right. Okay, kita tengok summary sikit lah ya. Let's take a look at some of the, just to summarize ya, kita revise sedikit ya, before we move on. Okay. All right. So this is a summary of, can you see now? Can you see?
Yes.
Yeah?
Yes, we do.
It's a bit small though. Okay. So this is on the MFRS 116, right? So of course you will need to know definitions, okay? How do you define, okay? How do you define? Because dalam soalan nanti dia akan bagi awak the criteria. All right, so from that criteria you are to identify whether it's a PPE or not. So the definition ni awak kena tahu. All right, so how do you define PPE? This one. Okay, PPE. Okay, if the asset is held by the enterprise, all right, for the production of goods and services. Okay, for rental to others, tapi the rental is not significant, yeah, for administrative or maintenance purposes, and to be used for more than one accounting period. So that will fall under the definition of PPE. So you must know what is the measurement, okay, or how do you recognize? Right, so you recognize that, okay, for the initial recognition, it is, as long as it meets this recognition criteria, will include future economic effects. The cost can be measured reliably, okay, then you should recognize it as your intangible asset. And the recognition at the initial, okay, depend on whether it's a purchase asset. So normally, yeah, it is a purchase asset. All right, they will give you this is an asset that is purchased by an entity. All right, so you are to be able to calculate, all right, their purchase price or their cost. All right, the cost of the asset. So for purchase asset, what are included in the cost? So purchase price. All right, and purchase price ni must minus any trade discounts. Right, must minus any trade discounts, and sometimes that can include directly attributable costs to apply the asset. So you must know what are those directly attributable costs. Okay, so those are like the installation costs, okay, the testing professional fees, all right, cost of site preparation, okay, and minus any net proceeds from the sale of the items, all right, when bringing the asset to its location and condition. Okay, all right, and sometimes this purchase price, okay, this purchase price, it could be paid by installment. Ni pun awak kena tahu ya, right? For those who have already learned about PPE, you should know already about all this, right? So sometimes this purchase price ni, okay, it could be by installment. Okay, combination of cash and installment. Right, so kita nak cari the initial cost of the asset, right? So the installment, walaupun dia dibayar, okay, in the next year kan, 1 year later kan, you still need to include that for the calculation of the initial cost. But that future payment must be the present value of the future payment. Okay, it must be the present value. So the installment will be discounted to the present value and add to the cash price. All right, to determine the initial cost. Okay. Right. So you may also include like, you know, there will be cost of dismantling or removing the asset or restoration of the site. Okay, so all these are the future costs. So remember, anything that is to be paid in the future, okay, the amount must be included at the present value, okay, to determine the cost on the acquisition date, right? And the asset that is given will also be a self-constructed asset. Okay, so if it's self-constructed, what should be the cost included? Okay, so all the direct materials, direct labor, okay, direct overheads, and may also include if there is borrowings, yeah, okay, loan taken, the borrowing cost, which is the interest. Interest loan, all right, is limited to the construction period. It must be interest incurred during the construction period only. Alright, kalau dah lepas construction period, the company is still paying for the interest. Jadi interest selepas construction period tu kita kan expense to as our finance cost. Okay, alright. So these are the things that you need to know. Kalau exchange tak pernah lah. Okay, normally they will ask. Okay, the very basic one, purchase, alright, deferred payment, seperti yang madam sebutkan this one. Alright, so that is for the initial recognition. Now, what about the subsequent recognition? Okay, you also need to know about the subsequent recognition. Okay, so let's take a look at subsequent. Okay. So for subsequent measurement, okay, of your PPE, right, the entity can either adopt model or revaluation model. Okay, jadi dalam projek nanti awak tengoklah dalam final exam ke dalam test they will mention what is the model. Kalau dia tak sebut, then okay, you will adopt the cost model. Okay, alright. So what is cost model? Okay, it means that your asset will be recognized at the cost. So if they give you fair value, just ignore the fair value. Okay, the asset will be at the cost and minus any depreciation and impairment loss. Alright. If revaluation model, then you have to recognize the asset at its fair value, and you must continue to provide depreciation on that asset. Alright, but the calculation of the depreciation, ni awak kena tahulah. Okay, how do you calculate the subsequent depreciation selepas revaluation? Okay, so how do you do that? You take the fair value and you divide by the remaining useful life. All right, not the estimated life here, but the remaining useful life. Okay. And there could also be an element of impairment losses that nanti. Right, so you must know how to calculate the impairment loss. Ini pun kita cover when we do intangible asset. It's very much the same. Okay, it will be the recoverable amount compared to the carrying amount. Right. And what is recoverable amount? What is recoverable amount? What is RA? Okay, and RA is the higher of fair value less cost to sell, all right, or the value in use. Value in use is the present value of future cash payments, all right, future cash payments, which is discounted on the date. Okay, the impairment loss happened. Okay, this one is the disposal. Okay. On the disposal date, all right, the minus the cost related to the sales. Okay, so we take the higher figure. That is RA. Okay. Right. And for evaluation, okay, similar to IA, this is very much similar to intangible asset. Okay, your evaluation can be a surplus or a deficit. Okay, it can be a surplus or it can be a deficit. What is a surplus? The fair value is more than the carrying value. How do you treat the surplus? You must credit it to your asset and valuation reserve. All right, and you transfer to your retained earnings. Okay, every time there is a depreciation. Okay, or when you dispose of the asset, the remaining revaluation surplus will be transferred to the retained earnings as you realize profit. Okay, and if you have a subsequent revaluation, subsequent revaluation, remember IA dia sama juga. Alright, you have to look at your previous revaluation. Adakah previous revaluation is a surplus ataupun deficit? Okay, and if let's say your current revaluation is a deficit, you must make sure you reverse the previous surplus. Okay, alright. Okay, so that is on PPE. Then you also need to understand about subsequent expenditures. Sometimes they give you subsequent expenditures. All right. So if it is PPE, all right. If it is PPE, then you may capitalize the expenditure if it meets the recognition criteria. All right. Then what is those criteria? What are those criteria? Okay, it must improve or enhance the asset. Barulah awak boleh capitalize. Okay. All right. In what way does it enhance the asset? The asset value. Okay, awak tengok dari segi expenses. Does it reduce the cost of the operation? Does it extend the useful life of the asset? Does it increase the quality or the quantity of the asset? All right. Otherwise, you have to write it off. Okay. And try to relate that to your IA. Okay, IA. Remember that there are certain expenditures, especially depreciation. Okay, let's go to depreciation. Okay, depreciation. All right. Okay, especially when it comes to depreciation. Now, if the PPE tadi, if this PPE is used in your research and development, for instance. Okay, so kena relate, profit ni kena relate to your IA. If PPE is used in your research and development, how do you account for the depreciation? The depreciation akan dimasukkan dalam or under R&D. Depreciation of PPE will come under R&D cost, but the PPE itself, okay, the PPE itself will be accounted for under MFRS 116. So how do you record the depreciation? Ni awak kena tahu lah ya. So you will of course debit, okay, your research and your development costs. So your depreciation will go in here. All right, and then you will credit your accumulated depreciation for your PPE. Okay. All right, so of course your PPE tetap akan dikurangkan. It will be reduced as a result of depreciation. It's just that the depreciation expense doesn't go to your SOPL under admin. Dia tak masuk sini. Alright, dia tak masuk kepada R&D cost. If the PPE is used for R&D activities. If not, then it should be recognized under expense of your software. Alright, park it under admin expenses. Okay. Alright. So depreciation is only provided if your asset has a finite useful life. Sama juga dengan intangible asset. Alright, intangible asset will only be amortized if it has a finite life. Okay. Alright, so that is on your PPE. Okay, and sometimes they will ask you about derecognition. What is derecognition? Derecognition here, normally they will ask about the disposal. So when you dispose of your PPE, all right, what do you do? How do you recognize? So you will have to make sure that you recognize the carrying amount of your PPE, meaning you have to eliminate the cost, you have to eliminate the accumulated depreciation, and recognize any gain or loss, yeah, from the disposal. And this gain or loss, where does it go to? To the income statement. And don't forget, kalau aset PPE is a revalued asset, kalau masih ada lagi surplus, okay, surplus, then the surplus should be transferred to the retained earnings as well. Alright, so these are the information that is important, okay, and you have to know and apply them, okay, to the question. Okay. So that is on PPE. Now we move on to the next one. Okay, investment property. Yeah, investment property. Investment property is MFRS 140. Alright, so again, definition. Soalan dia akan tanya, ya, okay, dia tak akan tanya what is the definition of investment property. They will give you the criteria. They will give you the criteria for the definition, and you are to determine whether the criteria meet the category as investment property or not. Okay, so let's look at the definition. Yeah. Okay. So what is IP? IP is land or building. All right, land or building held to earn rental. So as long as the criteria is given to you, yeah, earn rentals. Okay, as long as the criteria given is earn rentals or capital appreciation, then you know that this criteria relates to an investment property. All right. So because the asset is held, yeah, to earn rental income or for capital appreciation, so therefore it will be recognized as investment property under MFRS 140. Okay. Or they may give you, all right, the examples. Okay, they may say that the asset is okay, let's go to examples. Okay, okay, got that. Okay. All right, they may say something like, oh, the asset is vacant and held, and the company is held for undetermined future period. Okay, so that will form capital appreciation. Okay, land and property leave undecided what to do or left vacant. So that will be an investment property. Okay, but if they said, oh, the asset is now occupied by the owner, then it cannot be an investment property. So it will be under MFRS 116. Or they can say, oh, the asset is this asset is held for sale in ordinary course of business. So you cannot treat it as your IP or your PPE, but under MFRS 102. Okay, so that is the kind of question. So you must be able to identify, okay, the criteria to the category of assets. Okay, then they will ask you about the recognition. Okay, recognition. All right, initial recognition or initial measure. Okay, how do you measure investment property? Okay, it has to be at cost. Okay, the initial measurement is always at the cost. How do you calculate the cost of your land, the cost of your building? Dia sama lah dengan how you calculate the cost of then the building in your MFRS 116, right? If it is a purchased land or a purchased building, then it will be purchase cost plus, all right, all the costs directly attributable to the bringing the asset, okay, to its present location and working condition. Okay, all right. Okay, so if there is any deferred payment involved, then you have to make sure that you include, okay, the present value of that deferred payment. Yeah, so that is initial measurement. Okay, then the subsequent measurement. When it comes to the subsequent measurement, okay, what is the model used? Okay, companies can opt for cost model. So kalau dia cost model, then dia ada beza dengan PPE. But usually they will account for investment property using the fair value model. All right, especially if this is an investment company having a lot of investment properties. Okay, so fair value model. So fair value model, how do you account for IP or the asset using this model? Okay, so it has to be at the market value at each reporting date. Okay, market value here is fair value. Okay, it has to be at the fair value or the market value at reporting date. And because of this, it gives rise to gain or loss. All right, gain or loss due to the change in this fair value. And where do you recognize the gain or loss? To the income statement. Another point is, we do not provide depreciation, neither do you recognize any surplus or deficit. You don't call them surplus, you don't call them deficit. You use the word gain or loss. So that is the fair value model. Okay. And they can also ask you about transfer. You have to know about transfer, yeah, because sometimes dalam soalan tu dia akan ada, okay, the asset was initially recognized as a PPE, okay, occupied by the owner, okay, tapi lepas tu the owner decided to move out, yeah, to a newly acquired property, so this one becomes vacant or it is rented out to third parties, so it becomes an investment property. So they can ask you about transfer. All right. So when does transfer happen? You must look for this. Okay, change in use. All right, change in use from owner occupied to renting to others. So in IP, or it can be the other way around. Okay, the question can be an IP lepas tu it becomes owner occupied property. So you must apply MFRS 6. So how do you account for that on the date of transfer? On the date of transfer, what is the accounting treatment? This one we have to know as well. All right, so let's just quickly look at this. What happened? It is from IP to owner occupied property. That means you apply MFRS 140. Okay, and after that you apply MFRS 116. So on the date of transfer, okay, on the date of the change in use, okay, your IP will be stated at the fair value. Okay, and this fair value will become the deemed carrying amount of your PPE. All right. So since you recognize your IP at the fair value, okay, the carrying amount and the fair value definitely will not be the same. So that will give rise to gain or loss. Okay, this one. And where do you recognize? To the income statement. Okay. What about this PPE? This PPE, okay, if it is a depreciable asset, then you have to provide depreciation. Okay, depreciation. How to calculate the depreciation? It will be the fair value divided by the remaining useful life of that property. Okay. Dan macam ni awak kena tahu, awak perlu apply. Okay. Now, what if it's an IP to inventory? Okay, the question nanti project mungkin ataupun final exam nanti mungkin akan ada IP. Okay, kemudian transfer change in use becomes an inventory. So, on the date of the transfer, again your IP will be, okay, must be at the fair value. You must know what's the fair value of your IP on that date. Okay, so the difference between that fair value and the carrying amount of this IP, okay, the gain or loss tadi, all right, you must charge it to the income statement or recognize to the income statement. Okay, so that is for IP. So you will now reclassify, okay, from IP to inventory. So once it's become inventory, you apply this standard MFRS 102. So you must know what is the criteria to for it to be an inventory, right? For it to be an inventory, it has to be held for resale. Held for resale. And what's the accounting treatment? It will be recognized at the lower of cost and its net realizable value. All right, and what is net realizable value? That is actually the fair value minus the cost you expect to sell the asset. The date you are, if you were to sell this asset, right, this inventory, after you minus the cost related to the sale, that's the net realizable value. Okay, so you take the lower. Okay, so if the cost is higher than the net realizable value, you have to reduce this cost, and that reduction in the carrying amount of inventory. Yeah, where do you recognize that? To your software. Okay, right. So that is a bit lah. Dia akan tanya sikit je knowledge on the inventory. Basically about this one, the lower of cost and net realizable value. How to recognize if, all right, the cost is higher. Okay, where should you recognize the reduction or the amount write-off, okay, for your inventory? All right. Okay. Or the question can be from a PPE to IP. If let's say it is a PPE to IP, then you look at your PPE first. Okay, you must apply your MFRS 116 up to the date of the change in use. Okay, and for this PPE, whether the company used cost model or evaluation model, yeah, on the date of the change in use, all right, you need to fair value your PPE. Okay, and this revaluation will give rise to either a surplus or a deficit. Okay, so surplus will go to your asset evaluation, your deficit will go to your software. Okay, so your IP on the date of change in use will be recorded at the fair value. So meaning to say this fair value is deemed, okay, to be the cost of your IP on the date of transfer. Jadi you tengok IP ni, how does the company measure the IP? Is it cost model or fair value? So kalau fair value, then go back to what we said just now about fair value model. Okay. Or the question could be inventory to IP. Alright, yang ni dia takkan tanya lah, but basically it's this one. Okay, you need to know this. Right? You don't have to worry about that. Okay, so that is on IP. Yeah, so a bit of revision, okay, for IP and PPE as well as inventory. Any questions so far? Tu sedikit lah revision, ya. Alright, if you want to know more, you will have to read. Oh, okay. Right, saya akan buat satu soalan before kita take a break. Okay, we do one question, alright? Okay, so based on my lesson plan here, I'm going to look at this November 2019. I'm looking at November 19. Kalau tengok UGC, saya dah ada bagi jawapan, alright, untuk November 2019. So I'm just going to use one of the question and the rest you boleh baca sendiri, ya. Okay, lepas tu kita akan discuss soalan-soalan yang tak ada jawapan. Okay, we look at November 19. Okay. Right. You already have this solution, yeah? Okay, this is our question. All right. Okay, so your group project one, this question can also help you with your Tesla, yes, like a revision. Okay, let's look at question number one. On 1st of January 2011, okay, Win construct a new building. Okay, construct a new building and incurred the following costs. Right, so these are the costs. Materials for the construction, that's the direct material. Architect's fee, this is the professional fee on the building plan. So this is the directly attributable cost. Contractor's cost. So all these are costs that is related to the construction. The useful life of the building was 20 years. It is the company's accounting policy to adopt revaluation model for PPE, fair value model for investment property. So as at 31st of December 2014, and 31st December 18, the fair value, okay, of the buildings are given. All right. Okay, remember ya, kalau dia this building is a PPE, then you must adopt revaluation. If this has been an investment property, fair value. Okay, so compute the initial cost of the building. Okay, so whether it is an IP, whether it is a PPE, calculation of the initial cost is the same. All right, after all, this is your building. All right. Okay, let's look at the part B. Assuming that the new building is used as a cafeteria for the employees. The building, yeah, the building of the entity, after it's constructed, it is used as a cafeteria for the employees. So of course, this will be your PPE because it meets the definition of the PPE. All right. Okay, it's not meant for rental, it's not meant for capital appreciation, so therefore it will be a PPE. So explain the accounting treatment for this building. All right. Explain the accounting treatment for this building. Okay. So the other one, assuming the new building was rented out. So if it is rented, you are earning rental income. Therefore, it will be your investment property. What is the accounting treatment? Dia minta hanya this date. Okay, on this date. Right? So you should be able to answer them. Okay, let's take a look at the solution. This is the computation. So the total cost of the building under construction is 554,000. Okay, assuming that the building is a PPE. Okay, take a look at jawapan dia. Jawapan tu cara menjawab. You can see that you have to include the MFRS. Okay, you must include the MFRS. Okay, so on 1st of January 2011, the building will be recognized as PPE in accordance to MFRS 116. Yeah, PPE. Why? Kenapa? Okay, reason. Because it is used as cafeteria by the employees. Okay, it is used as a cafeteria by the employees and it will be measured. So here we talk about the initial measurement. Okay, at the initial cost of 154. Okay, as the useful life All right, the asset is given here. Therefore, depreciation per annum is 27,700. Okay, all right. And how do you recognize? It will go to your SOFL. The depreciation expense will be recognized to your SOFL. Okay. So as at 31st of December 2014, why do we look at this date now? All right, we look at revaluation. But they minta accounting treatment, yeah? So you must talk about revaluation. So the first revaluation is on 31st December 14. We are going to compare the carrying amount to the fair value of the asset. So the carrying amount of the building will be the cost minus the accumulated depreciation, yeah, for 4 years. So 11, 12, 13, 14, that's 4 years. So the book value, the carrying value is 443,200. The fair value is 450. So since the fair value is higher than the carrying value, you have to increase this carrying amount. All right, increase it by 6,800. Right, so it results in a surplus, and the surplus will be recognized to asset evaluation reserve. Okay. And what happened to the accumulated depreciation, okay, or prior to the revaluation? It will be eliminated. Okay, and the asset will have a carrying amount of 450. Then the next accounting year, they give you fair value again. So that means you have to talk about the subsequent revaluation. Okay, subsequent revaluation. So on 31st of December, the carrying amount of the asset. So this time, how do you calculate the carrying amount? Kita tak pakai the cost anymore. We use the fair value of 2014. All right, so the carrying amount will be calculated as follows. Fair value minus the subsequent revaluation, subsequent depreciation. Okay, so the subsequent depreciation will be fair value divided by remaining useful life. All right, and the remaining useful life here is 16. That means 20 years minus with 4. Okay, minus 4. All right, times by 4 years. So we start counting from 2015. 15, 16, 17, 18. Yeah, 4 years. So that's the carrying amount, and we compare to the fair value. And that will result here, in this case, is a deficit. All right, a deficit. So how do you recognize the deficit? Because earlier on we have a surplus. So the deficit of 2,500 will be debited to asset revaluation reserve. You don't debit to SOFL, yeah, because previously there was a surplus. So you must debit, reverse, yeah, your surplus account. So again, the accumulated depreciation will be eliminated, and the carrying amount of the building on 31st December 1835. Okay. All right. This is on PPE here. Okay. Now, assuming that the building is an investment property, so on 1st of January 18, the building will be recognized as investment property according to, okay, always include your standard. Why? Reason, because it is used for rental, or it is used to earn rental income. Then you mention the cost. Yeah? Okay. Now, since the question only required 31st December 18, so what happened on this date? Okay, this one we use fair value model. So fair value model, okay, we determine whether there is a gain or loss as a result from the changes in that fair value. So in this case, the carrying value of the asset is 450. All right, and the fair value is, wait, hold on. The fair value of the building, okay, is 450. All right, in 2014, yeah. Okay, and then in 2018, this is the fair. So it will be the difference between these two figures, lah. All right, because the previous fair value, the asset was carried at 450. All right, and now the fair value is, or the current fair value is 335. Okay, all right. So 450 minus 335, there is a loss. All right, 150, that would be recognized too. So, okay. So far, okay. So far, let's move on to the next question. Question number 2, this is more related to biological asset. Yeah. Now, Bubbles Livestock is in the business of breeding fish and planting durian for sale. Currently, there are 10 ponds to breed the fish. The company also owns the following items that are used to manage the breeding of those fish. Okay, so they have a unit of tractor for pond management and an acquired. Right? So explain the classification of the items. You must include the standards. Okay, so the fish, pond, acquired pattern, and durians. Okay, all right. So let's look at the answer. This is just like the tutorial. Okay, the video that was shared with you earlier on. Okay, so this fish is your biological asset. Okay, you must mention the standard and why it is considered as a biological asset. The pond itself will be a PPE. Okay, why? Because it's used in the production of the fish. Okay, to breed the fish. Tractor, this is a PPE, yeah, because it's a tangible asset and it's also used in production of goods and services, and it's going to be used for more than one accounting period. The acquired pattern will be an intangible asset under this standard, okay, because it has no physical form, it's intangible, all right, and because it's acquired, yeah, it's identifiable and there is control, all right, over the asset, okay. And the durian tree itself, all right, because the tree, okay, we're not going to cut the tree, yeah? We want the tree to bear durians. Okay, we want this tree to bear durians, yeah, for more than one accounting period. All right, and okay, and it's going to be used in the production of these fruits. Okay, so this durian tree is actually a bearer plant. Because it's a bearer plant, so it falls under as a PPE. Okay, it's a PPE under MFRS 116. Right. Okay, so these are the kind of questions that they can ask. Okay. Now let's look at the next one. Question number 3. Financial period for Telefarma and the 31st September every year. Telefarma owns an asset amounting to 750,000. Is the policy to use revaluation model, okay, for intangible asset, cost model for the PPE, and fair value model for the investment property? Okay, let's look at the first one. Assuming the asset was a right or a privilege obtained, okay, in the process of manufacturing and packaging. So if it is a right or a privilege, okay, which one does it falls under? Cannot be an investment property, cannot be a PPE. So it must be an intangible asset. Okay, we look at the criteria, we look at the definition, and identify. All right, so name the standard. What is the standard? Okay. The right was acquired on 1st October 15 and it had an estimated life. So the life is 9, okay, then we need to provide here we use revaluation. They give you the fair value. Okay, so what do? We need to do revaluation, right? Okay, and then on 30th September 18, the company was informed by a major customer that it would no longer be placing orders with this pharmacy or with this pharmaceutical company. This is your major customer, meaning this is the one that will generate, okay, revenue or future revenue, future benefits, economic benefit to your company. And if they are no longer placing orders with you, you are losing your revenue, right? So when you lose your revenue, okay, that means there is an impairment here. So you can see here, they revised that the net cash inflow earned from the right is 380, and the fair value less cost to sell, that will be the recoverable amount. Okay, so for your topic IA, all right, they ask you about the recognition, the measurement, and the impairment. Explain the accounting treatment for these rights, okay, for the year ended 31st December. Let's take a look at the solution. Okay, so on 1st October 2017, the carrying amount of the intangible asset is 500,000. How do you get 500,000? Cost minus the accumulated amortization. Okay, how do you calculate the amortization per year? 750 divided by 6, and accumulated times by 2 years. Okay. The fair value is 560, which resulted in a surplus, because the fair value is higher than the carrying amount. So you need to increase the carrying amount and thus recognize a surplus of 60,000, which will be credited to the asset revaluation. So on September 30th, 2018, the carrying value would be 420, right? Okay. Now on the same date, there was an indication for impairment. So we need to calculate the recoverable amount. Which one is it? The highest of these two figures. Okay, so 400 will represent the recoverable amount. Compared to the carrying amount, it results in an impairment loss. Why is there an impairment loss? If the carrying amount of your intangible asset is more than the recoverable amount, you will have an impairment loss. Right? And what do you do with the impairment loss? It will be written off to asset revaluation. Why asset revaluation? Because previously your intangible asset was revalued and there was a surplus. Okay, alright. Nanti kalau ada this question number 3 is good for your revision ya, untuk test. Alright, so remember ya, if let's say your intangible asset was previously revalued, okay, and then in the current year you ada impairment loss, your impairment loss you write off against the asset evaluation reserve. Kalau tak ada asset evaluation ataupun asset ni tak pernah di-revalued, then your impairment loss should be charged to the SOFO. Okay. So what is the carrying amount? What's the new carrying amount of your intangible asset after the impairment loss? Then this one, the RA will represent the new carrying amount, yeah, which is 400. All right. Okay. Let's go to the next one. Are you all clear on the part A, intangible?
Yes.
Okay, girl. Okay. Right, let's see. Right, let's look at B. Assuming the asset was a property, right? Property consisting of unit A and unit B. The initial cost of unit A and B, okay, is 450 and 300. And both acquired on 1st October 15. Both units can be sold separately. So if they can be sold separately, all right, that means they will, each unit, okay, will be revalued on its own. Okay, so if let's say one unit is used as a PPE, another unit is used as IP, then you will recognize them based on their usage, right? Because you can sell them separately. The economic life is estimated to be 6 years. Unit A is rented, okay, to third parties, all right, with annual rental 60,000, while unit B is owner occupied. Okay. So on 30th September 18, the fair value of unit A is 350, while the fair values of unit B is 320. Explain the accounting treatment for the properties with according to the relevant standards. So you have to go back to the accounting policy. All right, look at the accounting policy of the company. Okay, so definitely for unit A, it's going to be an investment property. So you will use fair value model. Okay, unit B is a PPE. All right, so you use cost model. Okay, so each unit will be accounted for using different models and different standards. Okay, so explain the accounting treatment. Let's take a look at the solution. All right, so unit A was as an investment property under MFRS 140. Why? You see, you must always give the reason, right? Why is it IP? Because it was rented out to third parties. Yeah. Okay. And on 1st October 17, the value of unit A is 450. On 31st September 2018, all right, the fair value is 350. Since you adopt fair value model for your investment property, you recognize a loss in the fair value, and this loss will be charged or recognized to the SOFR. Okay, so unit A will be carried at the new fair value of 350, whereas unit B will be capitalized as PPE at the cost of 300,000. Why? Because it's owner occupied. All right, so it'll be accounted for under MFRS 116. On 1st October 2017, the carrying amount will be 200,000. Okay, 200,000. Cost minus the accumulated depreciation. The annual depreciation of 50,000 will be written off to SOFR. Okay, so remember, it's not the accumulated depreciation that is charged to SOFR. It is the depreciation per year. The accumulated depreciation is to SOFR. It is wrong. It is the yearly depreciation that is recognized to SOFR. Accumulated depreciation is a contract account to your asset account. All right. So be careful with what you write. Okay. And 30th September 2018, the carrying amount of unit B will be 300 minus the depreciation accumulated. All right, accumulated, which is 100. So because the PPE, okay, the company adopts cost model, so we ignore the fair value. All right, ignore the fair value. Okay, and we continue to recognize the PPE at the cost and continue to depreciate it based on cost divided by its useful life. All right. Okay. Let's move on to question number 4. Okay. So question number 4 ni pun kita boleh gunakan as a revision for our intangible asset, yeah, because here you talk about software. Okay. Now, Fresh Light is a company incorporated in Malaysia. The company acquired an asset, yeah, for 50,000. Okay, acquired, okay, for 50. The policy of the company is to account for PPE, IP, and intangible asset using the cost model. If it is a biological asset, then it will be measured using fair value less cost to sell. Okay, let's look at A. Assuming the asset is a computer software, so this is IA, used in the operating system of a computer, and the computer software is not an integral part of this hardware. The software was acquired on 1st January 15. The lifespan is 10 years. At the end of the year, the fair value of the asset in active market is 51,000. Okay, fair value in active market. All right, that's the market price. Okay, 51. So explain what is the standard used to recognize this software. Explain the accounting treatment for the software for year end 2018. All right, let's look at solution. Okay. So according to MFRS 138, okay, computer software can be capitalized as intangible asset. Why? Okay, mesti bagi reason, ya. Because it is acquired for use. Right? Why is it an intangible asset? Okay, why is it an okay, I think jawapan ni macam a bit funny, isn't it? Why do you recognize it as an intangible asset? First thing, because it was acquired, right? Okay, and you recognize it as an IA because it is identifiable. Is it identifiable? What's the meaning of identifiable? That means you can separate it from the other asset. It's separable. Is it separable from your other asset? What is your other asset? The hardware. Your hardware. Okay? Your hardware is your other asset. The hardware here is your PPE. So is it separable? The answer is yes. It is separable because it says here, the software is not an integral part of the hardware. So it is not an integral part. Maksudnya tadi, you can use the software elsewhere. All right? You can use it elsewhere. All right? You not only can be used for this hardware, you can also use it in other hardwares. So it's not an integral part. So it is identifiable. Okay? And it is controlled. There is control over the asset because it's acquired. Okay, and it's bring future economic benefits. Okay, that is the answer lah. Yeah, the reason why you recognize it as an intangible asset. So you might want to adjust the answer here a little bit. Okay, because I think I don't really agree with how the answer is put. So just in case you have a different answer than this, then don't think that your answer is wrong if you mention something like this. All right, it is an intangible asset. All right, because the acquired software is identifiable. You can separate it or identify it separately from the hardware. Yeah, because it's not an integral part. Okay, and there is a control over the asset as well. Okay, all right. Okay. Now, let's look at part B. On 1st of January 2018, the carrying amount of the software, okay, will be the cost minus the accumulated amortization. Okay, 35. The annual amortization, 5,000, will be written off to SOFO. Okay, again, annual amortization, not accumulated. 31st December 2018, the carrying amount is 30. All right, so as the intangible asset using cost model, the fair value is ignored. Okay, so you don't have to worry about the fair value. Okay, and that's how we tackle the question. Yeah? Now, let's take a look at the next one. Assuming that the asset is 50 calves, all right, which is raised in a farm. So this one also useful for your revision, yeah, your revision. Okay, because this one talks about biological assets. Okay, all right, raised in a farm, so it's biological asset owned by this company. So there is a management of the activity. All right, so therefore this is an agricultural activity and this is your biological asset. Acquired on 1st January 18 and at the end of the year, the fair value in active market is 51. Okay. Explain what is the standard use and what is the accounting treatment, and you are given the cost to sell at the end of that year is 2003. All right, okay, let's take a look at the solution. So the standard use will be MFRS 141, agriculture. Okay, so please make sure that you give the name. Okay, MFRS 141, agriculture. The 50 cows will be capitalized as biological asset because they are living animals that is raised in the farm. So there is a management of the biological transformation, all right, of this biological asset. Okay, that's why we recognize it as biological asset and we apply this. Okay, let's take a look at the accounting treatment. All right, so remember, yeah, for the initial and the subsequent measurement of biological asset, okay, you will recognize them at the fair value less cost to sell. So on 1st of January 18, the biological asset will be recognized at its cost, all right, of 50,000. Okay, this cost is actually the fair value less cost to sell on this date, and it becomes the initial cost. Now, as at year ended, okay, 2018, the carrying value is 50. So we ignore any depreciation, okay? The fair value less cost to sell will be 48,700. So how do you get the figure? So you must make sure that the fair value, all right, you must minus the cost to sell. Okay, so since the carrying amount is more than the fair value less cost to sell, we have to reduce this carrying amount, and that results in a loss. Okay, and this loss will be charged to SOFL. And by end of that year, your biological asset will be carried at the new carrying amount of 48,700. All right, so that's accounting treatment for biological asset. So far, okay? Alright, sometimes soalan ni dia kan nanti dalam exam kan, okay, in your coming test, they might ask for you to explain on the accounting treatment. Okay, they might ask for calculation, lepas tu they might ask for explain accounting treatment. So this is how you explain on the accounting treatment, yeah, for your biological asset. Alright, jadi topik ni penting juga ya, boleh diguna pakai ya sebagai revision. So far, okay?
Okay. Okay, madam.
Okay, last one. Question number 1. Success is one of the leading football clubs in Malaysia. Acquired an asset on 1st of January 18 at the cost of 600,000. The useful life of the asset is estimated to be 5 years. On 31st December 18, fair value is 700,000. The policy of the company is to adopt cost model if it is a PPE and intangible. And if it is an investment property, they will use the fair value model. Now, assuming the asset was training equipment for the football players. Okay, equipment. All right, the club, okay, the company purchase an equipment that will be used, all right, by the players. What is this? Okay, which standard are you going to use? Is it going to be a PPE? Is it going to be intangible? All right, is it going to be investment property? And explain the accounting treatment for the above situation in accordance with the relevant standard for the year ended 31st December 18, and prepare journal entries. Right, now assuming the asset acquired is the right of transfer for a famous football player. All right, so this is a football club here. They have a football player. All right, okay, there's a contract between the player and the company. Okay, and there is a right, okay, for the transfer of this player. What is this? Okay, which of it falls under what category, and what's the accounting treatment? Okay, let's take a look. So the training equipment for the football player will be recognized as a PPE. So the standard is MFRS 116. Right? At the initial cost of 600,000. Since this equipment is a depreciable asset, depreciation will be 120 per year charged to SOFO. End of 2018, the carrying value will be 480. Okay, fair value is ignored. So they give you fair value. All right, you just ignore the fair value. What's the accounting? What's the journal entry? So you start from 1st of January. Okay, this is when the acquisition takes place. So you will debit equipment, credit your bank, cash, payables. 31st of December is when you provide the depreciation. Okay. All right. What if it is the right of transfer? So right of transfer, of course, will be your intangible. Okay, intangible. Right, under MFRS 138. Okay. All right, because this is an intangible asset. You cannot touch. Okay, it has no physical form. All right, this is a contract. Okay, so this right will fall under intangible asset. Okay? And this is the initial cost, and because it has a finite life, so we provide amortization. Okay, so make sure you use the correct term. If it's intangible, it's the amortization. Okay, the amortization you also charge to SOFO. Right, so the accounting treatment for these two is very much similar. Okay, you see there is a similarity, except that the terms used, okay, will be different. In terms of journal entry, okay, it is the same. All right. So 1st January, you recognize the acquisition of the rights. You debit right of transfer, your IA. You credit bank, cash, or payables. 31st December is when you provide the amortization. Okay. Here we use depreciation. Here we use amortization. All right. Okay. So, any question? Question? No question. Okay. Very good. So far, no question, yeah? Okay. Kalau tak ada soalan, kita take a break. Alright. Take 15 minutes. 15 minutes okay for you? 15 minutes, yeah?
Yes, madam.
Alright, I will some more question, but this time saya takkan tengok soalan yang dah ada jawapan. Kita akan tengok soalan. Okay, I will give you all these group projects and also final exam soalan saya dah bagi ya. So group project A June and October. Yeah, I will put that in the Google Classroom. All right, so please take a break now.